Hello, ladies and gentlemen. Welcome to the sixth episode of Smart Money Concepts. Haven't made one of these in a while, so figured I would go over some of the VIP trades that we have taken throughout the 2021 year thus far, and giving you a little bit of a breakdown as to exactly step by step how we analyze charts and how we go about entering with proper confluence and confirmations. So I hope you enjoy this video. At any time, if you are confused, please feel free to rewind the video and rewatch it. Sometimes it takes multiple rewatches to be able to fully understand all of the concepts, especially if you are a beginner smart money trader. And at the end of the video, as always, if you have any questions, please feel free to hit us up and ask. We'd be more than happy to help, regardless of if you're in VIP or not. Always trying to provide value to all you guys. So hopefully you enjoy this video and you gain some knowledge from this. So I'm going to first start off with NZDUSD here. And I'm going to look for the higher time frames first. That's always the most important thing. Higher time frame direction, what we're doing, higher time frame. Higher time frame trumps lower time frame, even though price within every single time frame is fractal, meaning everything happens on every single time frame. It's just you just have to be able to trade higher time frame and lower time frame in conjunction with one another. But understanding the overall trend in the market can definitely help with your lower time frame bias as well. So the reason why I have this blue line here, 0.6800. This is a psychological level. We have pushed up, we made a lower low, a lower high, and a lower low again, which kind of confirms to me that we're looking at pulling back and creating another lower low, which is exactly what we did. But let's just say that we didn't get into this trade yet and we were analyzing this. So I'm going to do bar replay. It confirms to me that we're in this pullback phase because one, we made a lower low, we failed to make a higher high, and then we made a lower low again. So we're looking for that 1 drive, 2 drive, 3 drive, potentially in some sort of area of interest. I mean, we could easily just come lower and fill up some of this imbalance down here, but this would be a good area of interest to be looking for longs because we still are in a higher time frame uptrend. Okay, so I marked off that level. That could be a potential take profit region, which is exactly what it was, and I'll go over that in a minute. But price, we can see there is a gap in price here. There's a gap, so that's another confluence. Price always comes and fills the gap eventually. Doesn't have to do it immediately, but it will overall. And we have to retest this prior high in market structure. And a lot of imbalance taking place right in here, just straight pushing up without any sort of relief and any pullback. So we can see here that lower low, lower high, lower low again. Looking for overall shorts at this time. Dollar was quite strong. As we can see here, we have finally broken out higher time frame. We have made that higher high, but we were trading in here with momentum, so I was really looking for NZDUSD shorts because dollar strength was coming into the market, overall pushing down into this sort of level here. Okay, so if price was just trading in here, I wouldn't be looking most likely for short positions because we hadn't had any confirmations that a pullback was in place. Yes, I guess you can say this broke structure here to the downside, but this is just intermediary structure. This is not higher time frame structure. Now, if we take out this low, fail to make a higher high, which we did, this would be higher time frame structure. We should be looking for a pullback to continue short. Okay, into this higher time frame structure here for then a long opportunity, which is exactly what we're doing now. All right, so higher time frame analysis is very, very crucial. Don't ever stick to one time frame for analysis. It never works out in the long run. You always need to do your top down. It is very, very beneficial for you to do so. So we understand that this level is where price could come, down into. So now we want to scale in here. I'm going to get out of bar replay. 1 hour time frame. So obviously we understood our swing points. Okay, we stopped here. We made a lower low. Well, we didn't know that at first until we actually broke this level again because we're still in a higher time frame uptrend. But then we made a lower high. We failed to make that higher high to take out that high, right? And then we came all the way over here, and then we finally made that lower low, taking out this low. So now we're looking for a pullback to continue short. Now, we say this all the time. It's always very, very important to be looking for, if you're wanting to be selling, looking for premium pricing, okay? And this kind of goes a little bit against our rules here. If I just pull my fib from this high to this low, you really want to be coming into that 50% at least, because between the 50% and the 100% is your premium levels. However, we had a really, really nice supply zone right in here, okay? So The reason why I was looking for price to react from this level and push down was because not only did we have the supply level here, right, but dollar was extremely bullish. So we wanted to continue to sell this. Now, if price just blew right through, then we would have still looked for sells within sort of this level here, but we didn't just place a sell limit right there. We wanted to wait for confirmations, and confirmations are extremely important when trading lower time frame. So we had our higher time frame confirmation, right? Now, this was a supply level that swept liquidity here. As we can see, these relatively equal highs. What we did is we came into this prior supply zone here, okay? And then we fell, making a lower low on this kind of lower time frame, right? So we pushed down, made an overall lower low, pulled back, swept liquidity, and now we're making lower lows and lower highs again, okay? So now we have this sort of unmitigated supply level here. We can see this double doji, sort of this slowdown in price, could be looking for a reversal, okay? And what price loves to do before coming back into key supply and demand levels is that it loves to create liquidity, okay? So this high here, this high here, this high here, here, and then it loves to sweep the liquidity to take all of the money, all the retail stop losses, come into the overall higher time frame level, and then make its move back to the downside for another leg, okay? So I was looking at that price, this around 0.70650. Okay, now if it just broke right through, that doesn't mean that we're going long, even though we did break structure, meaning, you know, we came down here, made this high, made this low, and then broke structure. We have to look at the higher time frame, understanding that we're still probably in this pullback phase for another leg to the downside, coming into the higher time frame level as discussed before. So it's all, structure is so important. That's really what we teach in addition to smart money concepts, is proper structure and how to identify it. So the reason why we took a trade from here, which I'll go over in a minute, is because we had the confirmation and the reaction from the supply level, that key supply level, in addition to sweeping liquidity. Okay, so now we're going to zoom in to this sort of level in here. Okay, so understanding that this tan, you know, kind of orange region here was our higher time frame supply level, we were looking for reactions from this to potentially go short. If we didn't have a reaction, there would have been no trade. It would have just continued long, and there we wouldn't have taken any short positions. However, I had this on my mind, and I'm going to go down to the lower time frame. 5 minute. I may have to do bar replay. Yeah, let's do that. Makes it easier. Okay, so we can see here that as price was coming up to this supply level, we started to slow down in price, okay? Price was starting to just make discrete higher highs, higher lows. There wasn't much momentum coming back up into here, which indicates that we're entering into a key area, which exactly we were doing, and we were slowing down, potentially looking for a distribution schematic, which we do teach in our Wyckoff course in depth. So we were looking for, you know, a distribution for a break of structure at confirmation, which is exactly what we got. But let me just kind of go through what's happening in here. Okay, so we pushed up, pushed down, pushed back up, created these equal highs. Okay, equal highs are very important when you come into higher time frame levels because you want to look for that final liquidity run on the lower time frame, which is 5 minute. Well, it doesn't have to be 5 minute, but this is what I'm showing you. Final liquidity run, break of structure. Okay, so this is the real buy to sell lower time frame sponsor candle. It's not one candle, it's a sponsor like region here. Okay, this was the region where we started to push up and then to push back down, breaking structure, taking liquidity, coming into that higher time frame supply, breaking structure to the downside. We want to be looking to mitigate that level and go short. This is exactly where we wanted to enter with a 24-pip stop loss. And I'm going to go to the indicators. This is the only indicator I ever use. It's the VFI. It's the volume flow indicator, is volume. And we can see here, this was the high in volume. This was not the high in price. Okay? Price continued to push up, but then volume continued to decrease, meaning there was divergence within this level. And divergence is a really great confluence when coming into higher time frame key levels, because you can scale in, look for divergence on a lower time frame, wait for that break of structure, that pullback to mitigate, and then you have a lot of conviction that it will continue in your direction, in this case, short. Okay, so volume was going down, but price was going up, meaning volume and price were not in conjunction with one another. We had divergence, we had the equal highs, we ran the equal highs, we fell, broke structure. Now volume and price are now in conjunction with one another. We want to look for that mitigation. It confirms that this last push up, this buy to sell move, was indeed a real manipulative move that we want to get out of. So it's exactly what we did. Came up, kind of, just chopped around for a little bit, but then we ended up falling back to the downside. This was a 1 to 11 risk to reward trade. So guys, you don't always have to take profit every single trade. Sometimes you lose 1, 2, 3, maybe 4 or 5 in a row. But if you have high risk to reward trades, which is really ultimately what you want to see, and you have proper confluence and conviction that it will continue in your direction, meaning higher probability setups, then you're good to go. I could have lost 10 trades in a row, but since this was a 1 to 11, I would have not only mitigated all of my prior losses, but I would have been in profit altogether. All right. So this is why a trading plan and proper psychology and emotions, controlling your emotions within trading, is so crucial. Okay, because many people, they would take 10 trades. If they lost all 10 trades, they would probably give up and quit, but they wouldn't continue to stick to their rules and do what's necessary in order to mitigate those losses. And it doesn't mean if you lose 10 trades in a row, oh, shoot for a 1 to 11. This just happened to be a 1 to 11 risk to reward because of the entry and take profit position. So, and this is another key thing to think about. Take profit is also just as important as your entry. Understanding when to get out of the market is also just as important as your entry. And it's happened to be a 1 to 11. So if I had to have lost 10 trades in a row, I would have totally mitigated those losses and would have been up a percent. So we got in here, very, very highly probable setup. We had a reaction, came back up, kind of chopped around. Don't know really why it did that, but nonetheless, it ended up falling. I'm going to go out of bar replay here. And this was all sent. Everything that I'm talking about here within this video and all the other videos have been sent to VIP. We don't ever go over trades that we take on our own because everything that we take on our own, we send to VIP as well. Okay, so we can see that we had just a continuation to the downside. We actually did get back in and a re-entry after NFP, or I think it was NFP. Maybe it was FOMC. I'm not quite sure. We had equal highs. We ran those highs coming into this new supply level here, lower time frame, and then we got in, I think, yeah, right in here, and then it just missed our stop loss by like a half a pip, but then it continued. But it doesn't really matter because one, we're hedging our position, or we're not really hedging, but we're adding to our position here, already in profit, and it's okay if you lose this one because we already took profit partials off of a reaction from here hitting TP1. So even if we were to have lost this trade, we would have been break even on both positions, even though we lost this one. Okay, so it's always, beneficial to continue to look for additional entries when you're already in profit on your original one, because now this one right in here happened to go for, I don't know, I think a 1 to 3 or 1 to 4 before it came back up, hit break even. But that's just an additional 3 to 4% on top of what you're already making here, right? If you're able to cover your loss, if you have a loss within here, if you're able to cover that with a prior position, go ahead and do so. It's just benefiting you in the long run, which is exactly what happened. This was the proper supply zone. We just missed it because this was the real supply. So I didn't break the supply. Came back down. I think it hit for 3, 4, 5%. Not quite sure. And I think that we moved stop to break even here, which it came all the way back up. If you had to just put stop right above this high, which you probably should have done, you would have been in massive profit overall, all the way back down into here. So you would have had double positions. So this just goes to show that, adding to your position, finding additional entries, not forcing anything, but finding additional entries can be very, very beneficial. So this was an overall 1 to 11 trade. It actually just missed take profit by 4 or 5 pips. Kind of annoying, but sometimes it'll do that when it's coming towards this sort of level because that's where a lot of these orders are. And what price will do and what the liquidity providers will do is that they'll come just shy of it, push back up, and then people will think, oh, it's just going to go long now, I should get out of my position, and they ended up getting out of their position somewhere in here instead of way down here. I do think price will continue lower. I think the dollar is still very strong right now for the time being. I do think we'll get another leg to the downside, come down and actually hit this psychological level. So what I'm looking for is really just to come back up into this sort of supply in here, because this was When we broke structure, lower low, lower high. This is a lower high that made this lower low. Okay, slower time frame structure. So anywhere within this level, we're really looking for price to fill more imbalance, come back down, or come back up into this prior low. So anywhere into here is really where I'm looking to sell it. I'm going to be looking for more confirmations to take this short. Okay, so that is NZDUSD. That was both of those trades that we took here were sent to VIP, and we made a huge bag from them. Next one I'm going to go over is GBPUSD. GBPUSD now, before I get into this, this was not our normal smart money concept type of trade. However, the risk to reward was there where we wanted to take the trade, and it was just to our advantage to do so. So let's go to the higher time frame here and see what's going on. Obviously, we preach structure. Okay. Higher time frame, price was continuing to just trickle and trickle and trickle and trickle up. Okay, there was no really strong pullbacks or waves in this market. We continued to just push up. We were looking for buys overall. GBP, the pound, at this point in time, towards the end of July, was extremely strong across the board here. So we wanted to continue to look for buys. We understood that we had equal lows. So a push back down did not really signify a break in structure. I was thinking it was going to just sweep liquidity and then continue up. Okay, and then in addition to that, we do have relatively equal highs within here as well. So this, in my opinion, is not a high in the market, meaning this is not going to be a high where we form an overall lower low. We have equal highs here. I do think we have to run those. So I was looking for a run on liquidity right in here. We had equal lows. So I was hoping for that sell to buy, which is exactly what we got. But now let me go down into sort of this region. And this region was the only region that hadn't been mitigated yet. And this whole, everything else has been accounted for. If you look at imbalances and sponsor candles, everything has been accounted for except for like this imbalance in here. And then there was a sponsor candle within this wick that we played off of very nicely. So I'm going to go down into it. Okay. Huge imbalance move. Okay. Beginning of February. All right. So exactly what we did. Started to accumulate in price, push back up, strong imbalance move, wanted to come back down and fill that, and we wanted to get the best risk to reward possible. We actually did say that we wanted to use half risk here because this was not a normal setup. However, it was a huge risk to reward that we didn't want to miss out on if we did get in. So just in case, it was quite risky. That's why we risked half of a percent. But it was a phenomenal risk to reward, which is why we took it. So the imbalance fill was right around 1.35810. The last sell before the big, huge buy up. Now, the reason why we took it from this level, not only because of the imbalance, but because of the reaction we saw after we sold to buy, right? So when we have big reactions, we usually come down and fill up the imbalance and retest the prior, or I guess this mitigation candle, that's last sell to buy candle before the big move to the upside. So this was a highly probable setup, even though it was risky with only like a 15 pip stop. 15 pip stop on something like GU is very, very small. So it was quite risky, but we were lucky enough to get a reaction from this level, and it just continued for us, which is very nice. In addition, we go to the 1 hour here. You can see on this lower time frame, well, 1 hour, but lower time frame in comparison to the higher time frame, we can see that these sort of demand levels were being met. Okay, we did come into this demand within here. So not only did we have a slowdown in price, as you can see, the trickled move, the accumulation with the strong reaction, the imbalance, but we had liquidity all in here. Look at all of these lows that we just completely swept with this move. That's why we probably had that strong reaction, because there was so much liquidity being built up under these lows here, trying to get people to go long from the support. That's why support and resistance doesn't matter. Retail doesn't matter because they always lose. No wonder why you go on the internet and you find support and resistance and trend lines and all that stuff. It's because they want you to learn that, because they want you to trade like this and put your stop losses where they want you to put your stop losses so they can come down and take them. It's exactly what it is. Okay, so coming into this last point of demand, sweeping liquidity, slowing down in price, strong reactive move, we wanted to get the best risk reward possible. I mean, yeah, you could have easily taken it off the 50% of probably this imbalance. You could have taken it off that, but price was coming down and we wanted to just get the best risk reward possible, and we ended up doing that as well. So we just delete what we have here, and let me go back out. That's exactly what happened. We came down into this sort of level here. Okay, had a beautiful reaction. Stop loss was placed just below the prior sell to buy candle way over to the left, which I just showed you. Now, if you didn't want to get in here and you wanted to wait for a reaction, you could have done so. Go to bar replay, 15-minute time frame, something like that. We saw the reaction take place from that level. We didn't make a higher high. We didn't break structure. Now, you could have waited for structure to break. In this case, it would have just continued and you wouldn't have ever gotten a pullback, but maybe that's a part of your rules and maybe you wouldn't have taken the trade. But if that's a part of your rules, then definitely stick to it, because sometimes it will come back down and retest and you'll get in. But we didn't make a higher high from this level, but we did have a reaction. So if you didn't want to get in here, you could have probably just gotten in right in here. Our last sell to buy candle, come back down, you could have had probably even a better stop loss. So there's always additional positions you can take. We identified that level, had a reaction from it. We did place our buy limit from this level. It was quite risky, but we did kind of a little bit luck out from this because it just had a perfect reaction and continued up. So if you didn't want to do that, if you were more conservative in your trading, more risk averse, you could have just waited for the reaction, which is exactly what we got. Came back down, hit that last sell to buy, and continued up. So let's just go out to the higher time frame and see where we are. Higher time frame, we actually did not hit our overall take profit. We just missed it by like 4%. This was a 1 to 30 risk to reward that we did send out to our members. It actually did come into about a 1 to 26, 1 to 27. We did take partials at a 1 to 1. Obviously, that's our first take profit. And then our second take profit was probably somewhere in here, I believe. And then we did sort of, when we pushed up into this sort of level close to 1.4, we did take off a little bit more, but didn't take off the entire position because obviously we want to hold to our overall target. Didn't hit it, came back down, and break even is at this point here. Our stop loss is at break even. So if you VIP members are watching this video, if you still are in this, continue to hold, obviously, but obviously stop should be at break even. Phenomenal trade nonetheless. My last pair that I want to go over with you today is CADCHF. CADCHF was a phenomenal trade for really two reasons. One, we were following the trend, which is really what we do all the time. Never really want to trade counter trend unless there is just an absolutely beautiful setup that allows you to do so. In addition, we had a manipulative move, and I'm going to go over in a minute. Manipulative move in the London session, London-New York session, which is exactly the kind of session you want to see these moves occur for us to enter into the trade. So let's just start off with a higher time frame here. I'm not going to go super in depth, but we can tell that we're making lower lows, lower highs, lower low, overall lower high, overall lower low, right? So you're looking for sells on this. CAD was quite weak at the moment, and we can see here that we did come into our prior supply level. Okay, sweeping liquidity, had our last buy to sell move, and now we're just trickling back down. Okay, so the reason why we took a sell position in here was because we're making lower lows, lower highs. We obviously knew the trend was to the downside. But two, if we were to go long, we probably should come into our overall demand zone. So our demand looks like this, okay? Push this over here. It's exactly where our take profit region was, which is exactly where we came into. And then what happened to go long? I was expecting it to go short and make a lower low, but we stopped here at this demand and went long, which is exactly why we have multiple take profits, just in case stuff like this happens. Even though we were expecting price to continue all the way down, make a lower low overall. Sometimes it doesn't do that. Sometimes it respects the lower time frame demand. And then obviously we can see with the 4 hour, we ended up having our overall pullback. Lower low, lower high, lower low, overall pullback, lower high. Now we make the lower low. So that's exactly why if you have imbalance, if you have other supply regions up in here, if you're not in premium pricing when you're trying to sell, and you can take profit at the prior demand levels, just in case it does go long, has the overall pullback, and then makes the lower low, which is exactly what it did. Okay, so now I'm going to scale into the entry. So now we have the lower and higher time frame trend in mind here. So just zoom into here. So we were following this lower time frame trend, lower low, lower high, lower low, lower high. Okay, so now let's just go into sort of what's going on in here. Okay, what we can see is even lower time frame trend, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now I wasn't looking for a trade to pull back and go short here. There wasn't really much confluence to do so, because who knows, it could have easily just ran it out and went short again, which is exactly what it did. So I look for those manipulative moves. We had the liquidity run here, coming up into this supply level, okay? And then we had the fall, which means this could be a major sponsored candle move, a last buy to sell. And since we did have room to go to the downside into this demand prior to pulling back, that just added more confluence to my trade, okay? I'm going to go over that in more depth in a minute. We had the liquidity run, the buy to sell, okay? We ended up going about the 50% of this level. It's just really where the equilibrium is, which is exactly what happened. We came into that to the T, had about zero drawdown, right? But this happened at 5:30 in the morning, so prime London, almost New York session changeover. So this is the exact time we want to start looking for these manipulative moves. We had the run on liquidity here, coming into this supply lower time frame, and then we fell making a lower low. Now, what if, let me just delete this, what if price came all the way back down into here before pulling back? Would I have gotten in here? Probably not, because what's the probability that it's going to react from here and go lower? I mean, yeah, you have a higher probability that you're going to make an overall lower low than stop here and make an overall pullback, that is for sure. However, I wanted the highest probable setup I could find. When it stopped here and started to pull back, one drive to the upside, pull back, two drives to the upside, pull back, three drives to the upside, and then we fall. Exactly what the market cycle does. One drive, two drive, three, A into B into C, fall. We had more room to go to the downside. There was imbalance in here. We had relatively equal lows right in here, okay? And we had this demand that hasn't been hit yet. So that just tells me we're going to go more short until we potentially go long. I was hoping that we could overall push to the downside, make a lower low, but just in case we were to stop here and go long, we still had room to go to the downside to come into here before going long, which is exactly what happened, which is why we had our take profit at 72100 into this demand level, psychological level. So scaling in here, if you wanted to see a reaction from here, you would have got it, but you wouldn't have gotten in most likely, because price never pulled back enough into this imbalance move to get you into a trade. So we had enough conviction, enough confluence in this trade to take the short, okay? So 50% of the manipulative move in London session, New York session, all right? So that happens anywhere between 3 and 7 a.m. Eastern Standard Time, following the lower time frame trend and the higher time frame trend here, lower low, lower high, lower low. Also the higher time frame trend, lower low, lower high, lower low, lower high, lower low. So it's all about finding market structure and then scaling into certain key areas and looking for your confirmations. So it's exactly why we got in here, had a perfect entry because we had all those confluences. Only a 13.5 pip stop. Now it did break structure here. You can see that we had our final liquidity run. Remember, liquidity providers, banks, and institutions love to create liquidity before finally taking it and then making its move. Very strong reaction. So after that strong reaction, I knew we were just going to continue down into this demand level, which it did swiftly hit at a 1 to 6.15 risk to reward, so 6.15%. And that was sent out to our VIP members as always. So if you wanted to wait for the confirmation, which could be smart on your end if you're more of a conservative trader and want just the best of the best probability, then you probably would have waited for something like this, last buy to sell. We had the reaction, we broke structure, and actually, I think you probably could have gotten in. Let's see. Oh, no, probably would have just missed by a pip or two. Unfortunate there, but nonetheless, we still got in a phenomenal trade. Hit our take profit very, very nicely. That's why it's very, very important to have a set take profit level. Understand where you need to be taking profit is just as important, as I said before, as entering. Okay, so 6.15% there. about 25% on GU, and about 11% on NZDUSD, with the second position probably up close to like 6 or 7%. So just in 3 trades, in 3 pairs, you would have made like 40+%, which is amazing. Okay, so this is why it's very, very crucial to control your emotions, wait for the proper setup, build confluence around that. And you don't have to trade every day. We don't trade every day. There's no point. In just 3 trades, you could have made 40%. But then a lot of people want to trade every day because they're impatient. They're short-sighted. They want the big bucks right then and there. It's patience that pays, guys. It really does. It really does. So we send all of these trades to our members each and every day. So if you are interested in joining VIP, we still have our promo going on. We just did release our supply and demand course that James has done a phenomenal job with, explaining in depth these key supply and demand levels that price reacts off of. He probably does a better job than I can, than I do. So if you're interested in that, yeah, feel free to hit him up. I'll be glad to get you set up with that. It's only $99. We made it a discounted price because we know a lot of people are struggling a little bit financially, but still want value in their trading. So wanted to provide that at a low price for you guys. As always, guys, if you have any questions, comments, concerns, whatever, please feel free to hit us up. We'd be glad to sit down with you and talk to you about anything. Even if you're not in VIP and have a question about any of these trades or anything in regards to your trading, we'll be happy to help as much as we can. So thank you guys. I hope you guys took a lot of value from this Smart Money Concepts episode 6. So until next time, thank you guys so much and happy trading.